Picture this. It is 30 years from now. Are you traveling the world financially free and confident in your future? Or are you anxiously checking your bank account, worried you may outlive your savings? For far too many people, that second scenario is an uncomfortable reality. The investing world feels complicated, overwhelming, and filled with risks. You hear stories about people losing everything. And it makes you think that you simply do not have the time or expertise to become a stock market expert. But the truth is that you do not need to be. You can build an incredibly powerful, globally diversified portfolio with a handful of key investments. And then, for the most part, leave it alone for decades. This is not a get-rich-quick tactic. It is a time-tested, proven approach to building real, long-term wealth. It is the foundation of index fund investing. In this video, we will cut through the noise. I will explain what index funds are and why they are likely the single most effective tool for the average investor. Then I will give you the blueprint, the 5 best market index funds you can buy and hold forever. These are the pillars of a true set-it-and-forget-it portfolio. If you find value in today's blueprint, consider subscribing. We are growing a community of disciplined, long-term investors, and we would love for you to join us. Now, let us get started. The first fund on our list is the Fidelity Zero Large Cap Index Fund, ticker FINOX. This is the cornerstone of a long-term portfolio. The S&P 500 represents the largest companies in the United States, including Apple, Microsoft, Amazon, and similar giants. While FINOX tracks a nearly identical Fidelity-created index rather than the official S&P 500, its purpose is the same. It allows you to own small portions of the nation's most powerful companies and participate in the growth of the American economy. The real advantage of FINOX is its cost. Its expense ratio is 0%. Traditional index funds charge ongoing management fees. Even a small fee of 0.5% can eat away tens or hundreds of thousands of dollars over the course of several decades. FINOX eliminates that cost entirely, meaning every dollar you invest stays invested and continues working for you. With no minimum investment, this fund is accessible to everyone and is one of the strongest starting points for a buy and hold strategy. Low-cost investing is the foundation of long-term success, and FINOX delivers exactly that. Our second fund broadens your exposure. While the S&P 500 covers the biggest companies, it does not include thousands of smaller, faster-growing businesses. To capture the full U.S. market, we turn to the Schwab Total Stock Market Index Fund, ticker SWTSX. This fund aims to own nearly the entire American stock market, from large companies to mid-sized and small companies that could become the giants of tomorrow. Think of an S&P 500 fund as a team made only of superstar players. It is strong, but it ignores the rising talent waiting in the wings. Smaller companies can be more volatile, but historically, they have delivered powerful long-term growth. With an expense ratio of just 0.03%, SWTSX provides full market exposure at an incredibly low cost. It also has no minimum investment requirement. By holding FINOX and SWTSX together, your portfolio captures the broad strength and depth of the U.S. economy. Now, let us look beyond the United States. A common mistake investors make is focusing only on one country. The United States may be dominant, but more than half of global investment opportunities exist abroad. That is why the third fund on our list is the Vanguard Total International Stock Index Fund, ticker VEDX. VTIAX provides exposure to thousands of companies across both developed and emerging markets. This includes nations like Japan, Germany, India, and Brazil. You end up owning companies such as Samsung, Toyota, and Nestle. International markets do not always move in the same direction as the U.S. market. There have been entire decades where international stocks significantly outperformed American stocks. Adding global exposure smooths out your portfolio's performance and reduces risk from any single economy. With an expense ratio of approximately 0.11% and exposure to more than 8,000 companies, VTIX turns a US-focused portfolio into a globally diversified one. The fund does require a minimum investment, but Vanguard also offers an ETF version for those starting with a smaller amount. Stocks are essential for long-term growth, but no long-term portfolio is complete without stability. That is where bonds come in. Our fourth fund is the Vanguard Total Bond Market Index Fund, ticker VBTLX. Bonds act as the anchor of your portfolio. They are not designed to create rapid growth. Instead, they help preserve your wealth and reduce the impact of stock market volatility. VBTLX provides exposure to the entire U.S. investment-grade bond market, including U.S. Treasury bonds, government agency bonds, and corporate bonds. This gives you a stable and well-diversified foundation of more than 17,000 bonds. The fund also pays regular interest, which adds predictable income to your portfolio. VBTLX has a minimum investment requirement, but the ETF version, BND, has no minimum and tracks the same index. This part of your portfolio is what helps you sleep peacefully during turbulent market conditions. Knowing your money is balanced and protected. Finally, we strengthen our global diversification with international bonds. The fifth fund in our blueprint is the Vanguard Total International Bond ETF, ticker BNDX. Just as we do not want to rely solely on U.S. stocks, we also do not want all of our bond exposure tied to one country. International bonds allow you to access the debt of stable foreign governments and corporations, adding another layer of resilience. What makes BNDX especially important is that it is currency hedged. International investments are often affected by exchange rate fluctuations, which can create unnecessary swings in performance. A currency-hedged fund removes that currency risk, giving you a smoother and more predictable return. With an expense ratio of just 0.07% and exposure to thousands of bonds worldwide, BNDX completes your global foundation. These 5 funds together form a simple, powerful, and fully diversified buy and hold portfolio. FinOaks gives you low-cost access to America's largest companies. SWTSX expands your reach across the entire U.S. market. VTIX opens the door to opportunities around the world. VBTLX provides stability through U.S. bonds, and BNDX adds global bond exposure while reducing currency risk. Building wealth does not require complexity. It does not require perfect timing or constant trading. It requires discipline, diversification, and low costs. With these 5 funds, you own a meaningful slice of the global economy. You can automate your investments, stay consistent, and let compound growth work for you over the long term. If this helped you, let me know in the comments which of these funds you are most interested in. Thank you for watching, and I will see you in the next one.